for peaks are, other than working from home, which makes him less angry now that he has a beach house.
Yes. Kevin, what do you got for us?
I feel like Kevin isn't there. Is Kevin not there?
Am I here?
Yes.
You're here.
All right. So here's what I thought was interesting about some of the AutoNation numbers was, they talked about beware going forward, chips not so much an issue, left some demand on the table in 2022, so automakers ramping up some production and prices are going to fall, which is not what happened in the fourth quarter, right? It was, I think, the third consecutive record price or average revenue per transaction for AutoNation specifically in the quarter, but gross profit per vehicle, new and used, was compressed. And really what that comes down to is the manufacturer is seeing retailers getting over sticker from November 21 through November 22 and saying, well, obviously we're not charging enough at wholesale. So margins are compressing for AutoNation, which is where they kind of directed your eye during the call or during the release. Yet prices are still very high. In fact, another record for them for this quarter. So, I think the industry or the automakers, the manufacturers, don't want to leave sales behind. So that means a little bit more production, which just comes along with softer pricing. But we're not going back to 2018, 2019 pricing structures.
I always thought, in The Sopranos, when Tony takes over that gambling addict sports business and he just squeezes him for every penny he got until the guy's broke. I feel like the automakers are kind of doing that to the average consumer right now. The average monthly payment for a new car is $777. That's double what it was in late 2019, pre-pandemic. And now we hear from the credit card companies that they're having problems meeting those payments. Mary Barr told us yesterday the lower-end consumers are starting to miss their auto payments. At some point, this is going to be a problem. The prices are just too high, Kevin.
Yeah, and a lot of that is due to mix. Remember, we can go back to 2013, which was the last time in the U.S. truck and car mix was 50-50, and it hasn't been close since, right? So there's a part of that is, hey, if there is a finite amount of chips or production or our cost structure is lean enough, we're just going to make the most profitable things, and along with that comes higher prices. So, I don't know. There's very little opportunity to go back because the more affordable things just don't exist anymore, right? So I think that's where you get the automakers looking at it and saying, well, buy something certified pre-owned or pre-owned from your dealerships. We don't live in that $20,000 space anymore. And that's, even used cars are $25,000 to $30,000 now. So yeah, it's certainly going to affect demand, but I think at different points in the supply, they don't care as much as they used to, right? Because your fixed cost structure is now rationalized to the point where you don't have to sell every possible thing at any possible price. And you can kind of hold out and say, no, we live in this $50,000 to $55,000 market. And I mean, the volume brands that GM has or that Ford has or Toyota, those are moving up because their mix is so much richer.
Hey, Kevin, we had Mary Barra here yesterday at Bloomberg talking to our print folks, our radio and TV folks, and boy, really aggressive commentary on their push into EVs. Give us your latest feeling about kind of what we're going to hear from the Fords, from the GMs, and maybe what it means for the incumbents. I got
to say, from what I heard Mary tell us and what she told David Weston on Bloomberg Television and radio, it seems like GM, their EV business is a coiled spring that's just about to get set off. I mean, they want to make and sell $50 billion worth of EVs, profitable $50 billion of EVs by 2025. That's like next year, right?
Yeah, that is. And what was, unit-wise was, I don't know.
That's $1 million, dude. That's $1 million at $50,000 a piece.
Right, it's $1 million in 2 years from 40,000 last year, right?
Yep, 44, yep.
So the thing I see with that is, right, it's going to be, if it's possible, it's going to have to be a lot of the, $30,000, $35,000 vehicles.
She said that yesterday. She said that.
Right. I mean, so you have to be concerned about margin and profitability if that's what you're planning to do. Because essentially, right, if you look across at Ford, who talked about break even on Mustang Mach-E going back, several quarters, $50,000 now because of material costs, it's maybe $60,000. Well, how many $30,000 things do you want to sell? If your cost to produce them is above that, 1 million of them. That's just not how you usually run the business. So one or two things has to happen. Either you're going to give up a ton of profitability and margin to make that transition, and hope you're rewarded with profitability, kind of the way Tesla operated.
Yeah, I was going to say, or valuation or market cap. I mean, there are a lot of people out there, Kevin, who were skeptical on Tesla for a long time,
right?
And yet that company was worth over $1 trillion for a substantial period.
Right. So maybe that's the trade, is that you say, well, we're going to give up some profitability or a lot of profitability to do 1 million units in the next 2 years, but we'll be rewarded in market cap.
What are you driving these days, Kevin?
It's still my V12.
Oh, no big deal.
V12.
I like it.
I think the transition from internal combustion engine to EVs can be a tough one.
What's the V12? It's like an SL65?
It's a 600.
Nice.
Yeah, I don't see the...
I'll be the last one.
You're going to be the last one in your garage. All right, Kevin Tynan, thanks so much for joining us. Kevin Tynan is the senior autos analyst.